Hello everybody, I'm Ricardo Evangelista from ActivTrades, and this week we've had a mix of emotions flowing through the markets. Everything started really well on Monday. All the major indices were on the up, confidence was high that a trade agreement was soon to be found between the US and China. Everything was going well, confidence in Brussels as well, where the UK's Attorney General was renegotiating the backstop clause of the withdrawal agreement. Everybody was rubbing their hands and thinking, okay, we have a continuation of this big rally going on. However, things didn't turn out quite so well as that. And why? Well, part of the positive feel at the beginning of the week derived from what the Chinese did. So China announced a stimulus program. So it's basically a fiscal stimulus with the objective of incentivizing consumption and stimulate growth through internal consumption. Chinese equity markets rallied on this. Everybody was very happy about it. However, this sense of happiness didn't really move on to the other markets across the world. So Europe and the US both failed to follow on the step of China. And as the week progressed, and as it became more obvious that actually, even though President Trump and President Xi of China both really need an agreement to consolidate their internal positions, for different reasons, of course. President Xi needs growth. President Trump is already starting to plot for his re-election campaign. They haven't really been able to reach anything of substance so far in terms of an agreement. Also, in Brussels, what seemed to be going so well is now turned quite sour. So there's nothing going well in Brussels at the moment. The Attorney General is coming back. There's no agreement to make any changes onto the backstop Brexit clause. And therefore, what is likely to happen is that Brexit will be voted next week in Parliament. Parliament is likely to take control, vote a motion to take off the table a no-deal scenario, and then we'll see what happens. So, results on the markets. Results on the markets is that everything is very slow, very low liquidity. Everybody's waiting to see what's going to happen between the US and China, what's going to happen with Brexit. No major decisions, investors sitting back, very low liquidity. Elsewhere, we have, of course, the big meeting of the ECB, which is happening on Thursday evening. It's not a meeting, it's actually an announcement. Everybody expects they will maintain the current interest rates. Of course, there's nothing else they can do there, looking at the state of the affairs in the Eurozone. But they are also expected, and these are rumors, but they seem to have some substance into them. Everybody expects the ECB to be even more dovish, so to downgrade growth forecasts for the Eurozone and to announce an extension to the long-term, very low rate loans to the Eurozone banks, the so-called TLTROs. This is actually likely to have a positive impact on the euro, believe it or not. Because, as we know, the Eurozone suffers from many headwinds, but one of the main certainly is the perils that their banks are facing at the moment. So banks in the Eurozone have been suffering because of very low interest rates, which is not good for their business model. And so this announcement of the extension of the TLTROs is likely to have a positive impact on the feel surrounding the health of the banking system, of the banking sector in the Eurozone, and therefore have a positive impact in the euro. Don't expect much, but it's likely to have something positive coming from there, at least in the short term. Elsewhere, oil, some losses for oil. This is because of higher than expected stocks in the US. So some stock taking was taken and the inventories came out with a figure much larger than what was expected. Gold is also suffering losses. This is mainly because of the strength of the dollar. And this is all we have for this week.